Market breakdown, I want to show you how easily 3% were made. So we are on Gbpjpy currently on H1 time frame. Now this happened on the Wednesday in the New York session, but the setup was created in the London session because of the Asian range, etc. Now on the higher time frame, if I switch back to the H4, you can see that we are currently bearish. We are breaking structure to the downside, and what happened on the Tuesday, we have significant move to the downside in the New York session that broke all of the lows on the left side, which means that we are into the bearish movement. Now if I go back to the H1, now this structure in between is H1 Asian range, as you can see, and we have the supply area there with the order block sweep on the left side, which means that order block sweep all of the liquidity on the left side before creating a structure break. Then we have imbalance as well, which are the reasons for price to go higher and to reject the order block and cover the imbalance, obviously to fall down. Now if I switch to the 15-minute time frame, as you can see there, right? So what we have on the 15-minute time frame, we have structure break on the left side, as you can see. We have BOS. We have imbalance to be covered as well from this week all the way up to this week. So this candle represents the order block, and the order block swept the liquidity on the left side. So if this happens, you know that price will not go higher, because everything here on the left side, as you can see, in the terms of equal highs, or let's say liquidity, has been taken out, right? So in this case, from the Asian session, if I apply the indicator of the Asian session, as you can see, we have the Asian lows that were neutralized in the London session. If the Asian lows are taken, then usually price is going to push higher to take out the Asian high and to make this bigger retracement, as you can see there, right? So this was the setup being created in the London session, but was triggered in the New York session. Now where we can go into the market, if I go on the 30 minutes time frame, we have bigger order block to trade from, right? So I'm gonna apply this level there. As you can see, we are on 181.08 price number. So I want to bring that down because I want to be specific. I want to say we have 0.0, right? So we are currently there. Now cross confluence is always going to be 15-minute time frame for the possible sells in this case, right? So 15-minute time frame. With GJ, what GJ obviously is doing usually is getting triggered by the numbers. So like 0s, 20s, 50s, and 80s. So in this case, we have 30-minute order block, which is basically on 0.8, like we saw on the 30 minutes time frame. Then we have 15-minute order block, which is basically on 20 pre-number. So in this case, I want to bring this price down to the 20, like this, 20 sharp, and we're gonna mark that up as a 15-minute OB, and we're gonna mark that up as a 30-minute OB, right? So because GJ loved the numbers, right? It loves the numbers, it loves the liquidity, and it loves the imbalances. So where my entry was on the Wednesday was basically on the price number, on the top side, on the 20th sharp. My stop loss, so stop loss usually when you're trading off the order blocks is, if you're selling, it's above the order block, or if you're buying, it's below the order block, right? But you have to consider you have to consider spreads, you have to consider, which pair you're trading. Like for instance, GJ is having those weak spikes all the time, so I wanna bring stop loss. We're gonna choose 25 in this case just to be safe. So minimum for me is 15 pips on GJ, but 25 pips is still good. Now in a sense of target, what we can target. Now my usually risk reward ratio is 1 to 3. So I wanna bank 3% per trade. And when I do, boom, I'm done for the day, and that's it. right? But in a sense of where what target we can choose is basically we have those equal lows, right? So we have liquidity sitting just below it, okay? We have liquidity sitting just below it. We have this external range liquidity below this week as well. So those are going to be potential target in the future, right? It doesn't mean that price is actually going to, you know, hit them at the moment, but in the future we can have this target, right? So we're gonna choose 1 to 3 risk reward ratio. As you can see there, it's 1 to 3, 75 pips. In a sense of price numbers, we are at 47, which is just 3 pips shy of 50, which is obviously cool. So let's play ahead. Let's see what market did. So this is still the London session. As you can see, the great impulse that broke the structure to the upside is still the London session, right? So let's see. Okay, we are pulling in the New York session. So what happened prior to the New York session is the last piece of the confluence I want to see in order to go into the trade, which is inducement. So inducement is smart money trap, which means that price is fairly gonna stop below the entry or above the entry, whatever the case may be, is going to stop and trap the people in, those people that are impatient enough to, you know, to just throw themselves in the market with manually trading. Is called inducement because they are entering into the sells there with stop losses just above. So usually stop loss of the people that doesn't know what is inducement or getting trapped into the smart money concepts is basically my entry, right? So we're gonna have this as inducement, which is perfect, is jackpot setup. So let's see. So we are currently in the New York session. As you can see, we are being triggered, taken in to the trade, and let's see what happens. Okay, falling down. So this is a time where price is running 1% into the profit like this. It's more than 1% currently. I place stop loss on break even. Why? Because I want to be risk free. I don't want to get exposed into the market of, you know, getting stop loss hit for no reason. So break even is set. Currently we are running 2%. So we had our TP at 47 price number. So let's see what happened. Boom. And with the next 2-3 candles, we hit 3% to the T, which was basically my trade on the Wednesday. And I called that as well in the signal group, which everyone profited. So let's see what happens next. As you can see, when the 3% were extracted, price tends to reject and reverse all the way back up to our entry point. And yeah, so guys, always keep winners. Let's say, do not, you know, wish for 20%, 10% retrade, because sometimes it can happen, but most of the times you're not going to hit them and you're going to be left with 0 or even loss. So have realistic targets of 2%, 3% maximum, let's say 5. You know, depending how the trade goes, obviously, because sometimes if you're in confluence with the higher time frame, if there is enough of the volume in the market, price will actually push down and you're gonna actually make 5+% per trade. But in this case, we were in the New York session closely to the London close, where in volume tends to slow down. So 3% was the top target, and that's it. You strike that, you call it a day, and see you in the next trade. Thank you guys for watching. I hope you learned something new. I hope you're gonna take some notes from this breakdown of the GJ trade. If you want to join our community, there are links below in the comments. You can join as well into the signals, where I call between 2 to 3 trades per week. I usually only trade GJ, so you're gonna have a lot of volume in the trading. We usually take London and New York session depending on the setup. So guys, thank you for watching. If you like the video, please comment, like, and subscribe. See you in the next one.